Hello, this is Jim Smith from GannAnalysis.net. Today we're going to talk about the Indian stock market, specifically the bank Nifty, if you will. But before we get to that, I want to show you something that, since we're talking about India and Indian stock market, I want to show you something that came from India that W.D. Gann liberated. Well, actually, he stole it, but whatever. At the time, nobody thought it had any value except maybe Hindu mystics. That's where the square of 9 came from, the Gann wheel. If you start at 1 and you go around the circle, when you complete one square, that's 9. And then you just keep going out into an infinity. But the name square of 9, that's where it comes from. A lot of people call it the Gann wheel. They have different names for it, but commonly it's called the square of 9. And we'll get into that some other time. I just wanted to show you something that W.D. Gann borrowed from India. So maybe it's not such a shock that Indians are very interested in Gann, because it's really not Western. It comes from the East. It comes from Hindu mystics. So with that in mind, I do want to cover the Bank Nifty, NSE Nifty Bank Index. And I want to show you the square of the range by time today, because normally you square it by price. You take the range in price to establish the range in time. So you know there's an X and Y axis, and you need both in order to have a chart. So for that reason, in order to make the square, you're looking at this. This is the square here, going down. Now, how do we create the square? Well, like I said, if you're using price, you can square the range by price. You can also square it by time. Let me show you how to square it by time. If you have a 1 by 1 line of 64 points, in other words, all the red lines on this chart, the price unit is 64. That means that as this line moves up, you want to know what the slope is. It's moving up at a rate of 64 points per trading day. So that's where, we establish the 1 by 1 line, and then every other line is a derivative of that 1 by 1 line. So 1 by 2 would be half the slope of the 1 by 1, and a 2 by 1 would be twice the slope. And you could do a 4 by 1 or whatever, 8 by 1, but I try to keep it less cluttered. So this is why I only do the 2 by 1, 1 by 1, 1 by 2. So, and then you have the divisions of the square, 1/4, half, 3/4, and the completion of the square in time. What I want to draw your attention to is how we create it. So, as I say, 64, that's 64 trading days. 64, not trading days. 64 is the scale of the 1 by 1 times the number of trading days, 377. Here it says bars. That's trading days. Okay, so from this low to this high is 377 trading days. And you multiply by the scale that we established for the 1 by 1, and that gives you 24,128. And that's the distance from this high to this low. That's the price distance of the square vertically, right? So horizontally, you have the time horizon, which will replicate that initial swing of 377 trading days. So that's how you create the square. And if you were to look at the square above that, from here to here would be the same price distance of the original square. We're just putting one box on top of the other. So in other words, it would be 24,128. From this position right here, you just add 24,128 to get the top of the second square. And you could keep going. If the market keeps going, you do a third square. So how is this useful? Well, it just so happens that I drew this square a long time ago, back here, when it formed this high. I was looking at it and thinking, well, maybe that's a high. And then, of course, I haven't covered this market for a while, but it went on to make new highs. And you're saying, well, the square is no longer useful. Well, I beg to differ. You can see you got a low here in time, 1/4 of the way through the square. You got a high halfway through the square in time. And now we're breaking down. You broke below the 2x1. That gave you this slide, which took out the 1x1. And pretty soon you'll take out this former high at 48,636. And that will start a waterfall decline. So I'm saying if you do Gann, it's like feeling different parts of the elephant. You know, the three blind men, they all feel different parts of the elephant. They describe different things. One of them thinks it's a tree, the other thinks it's a snake. You know, it just depends on which part of the elephant they're feeling. And the reality is that's what Gann is like. If you are just doing one tool from Gann, you really don't know what you're doing. What you have to do is use all of Gann's tools, or as many as possible, and you get a real sense of what's going on. So I just want to emphasize this is not a complete analysis. All we're doing is the square of the range by time. So this is more of a tutorial to show you how it works. This is not a complete analysis. If you want a complete analysis, just subscribe to my service and you will get the full report. And trust me, this is one of the more interesting markets right now, Nifty Bank or NSE Nifty Bank Index. I have some great charts which do make use of the square of 9 and some other tools from Gann that will blow your mind. So this is not the only amazing chart. This is just one of many, many charts on this market that are very insightful. This gave you the high. So the question you should be asking now, what happens when it gets down here 3/4 of the way through the square, January 24th, 2025? What happens when it gets here, May 14th, 2025? Well, circle those dates on your calendar because trust me, they're going to be turning points. Because we know this was a turn, we know this was a turn, ergo we know this is going to be a turn, and we don't always know what kind of turn it'll be, but we know it's going to be a turn. And if you sell off into it, maybe it's a bottom. Let's say you sell off hard all the way down here, halfway through the 50% retracement of that prior swing, bounce off that, and then rally into it. Well, then you've got a lower high and you set up another leg down. So it just depends on how you trade into those increments, especially the quarter increments in time. 1/4 of the way through the square, half, 3/4, full square. And obviously the full square is going to be more important. It was important halfway through the square. That's a really big cycle. And also note while we're looking at this that 1/4 through the second square up in price gave you the high in price as you were making the high in time. That's a really big concept to get your mind around because with Gann, it's all about the balance of time and price. If you're a fundamentalist or a random walker, you're going to tell people that nobody can predict the market. You just have to diversify and hope that your stocks do well. But if you're a Gann analyst, you're going to say the fact that you had time and price in balance, you had a pretty good idea that that was going to be a high. And now maybe you don't know if it's the all-time high. You just know it's a high. And then once it starts breaking below these Gann lines, then you know, okay, maybe this is a correction. And if you take out 48,636, that former high from December of 2023, wow, you're going to start a waterfall decline. Now, maybe it won't do that. You can argue with me and say, well, no, it's going to bounce off and go higher. Fine. Let the market tell you what it wants to do. I'm just telling you that's the line in the sand. That's your that's the line you want to avoid if you're long, you do not want to see it close below this line. That's going to cause a lot of people to start selling. And I think, honestly, I think it probably will, but let's see what happens. And if you look at this, like I said, if you look at this, it called the high. You definitely need to be watching what happens as you complete the square in time. The two most important points on the square are halfway through the square and the completion of the square in time. But if you happen to be hitting a quarter division in price in the second square up, so much the better. Time and price. That makes for a great Gann trade. When they're in balance, you get a change in trend. In other words, it's not a random walk. It is a totally predictable event. Now, people are going to argue with you that, this is all chance and coincidence. I'll let you decide. You tell me, as this thing starts taking out support, whether Gann actually predicted the high or whether it was just dumb luck, another coincidence. Because you do get accused by people in social media that, hey, you're just telling stuff that's already happened. Well, in point of fact, my clients knew about this. I pointed this out, and I also I had it in my workbook, well in advance. Anyone could follow it and see what was happening. So it was there on the Gann charts. It's not something I made up. Because if you were drawing this now, you would not make this the high. You'd probably make this the high. You'd have a different square. But like I said, even though we've exceeded that former high, this square of the high, a square of the range in time, is still useful, especially in time terms. The square is predicting turns. It's pretty awesome. So I hope this has been helpful for you. If you like this, give us a thumbs up on YouTube and follow us on social media, especially YouTube, and visit our website, www.gannanalysis.net. Register, you get a few free reports, and also note that if this is a market you really care about, you probably should be a subscriber, because you're not seeing, this is the tip of the iceberg. You're not seeing the full report. I'm working on it now. It should be out in a day or two. It will blow your mind if you see that report. Good luck in your trading, and good luck in your Gann studies.